Welcome to the daily update, where I'll go over the action in the market for Wednesday, May 1st, and then we'll see how things look for Thursday, May 2nd. Well, the market pretty much saw a round trip, especially with the S&P. It looked like we were going to break to the upside. That ran out of steam, and we came right back down to where we were at. We ended up closing lower. We're still looking negative in the short to intermediate term, and we're really going to have a hard time turning positive. In fact, we won't turn positive unless we can break above this overhead resistance. It looks like the Fed is now adopting this higher for longer type of an approach. That's changing our scenario slightly, and the market will readjust to that as new realities become apparent. So let's go back and talk about what happened. We did have a lower open and prices chopped above and below about the 5,025 level. And that's pretty common. We might see some gyration because there was a major economic report. And then once that settles down, the market just kind of is in waiting mode. Then after the announcement came, prices rose above the unchanged level, the daily pivot at 5,061. We got above R1 at 5,086. And then we fell all the way back down to close at the pre-announcement levels. So we were down 0.34% on above average volume. So that did pick up there. And as I said, we're negative in the short and intermediate term, not really showing any extreme readings right now. And we're seeing a bit of a deterioration continue to flow through with the charts. The long term, we're still hanging in there. And we'll still get some more inflation data, and then we're going to have the employment situation report on Friday. Some comments: the Fed did leave rates unchanged, and that was as expected. If you watch the weekly videos that I do, I always update the probability of what the Fed is likely to do, and the Fed really should follow what those charts say. We're kind of shifting more to an environment where the Fed is supposed to follow the market. Now it's like the market is following the Fed, and that's a bit different than it used to be. On a short-term basis, we still have our slope oscillator is extreme negative, but it's still above its moving average. And long-term, we are coming down, but we're still extreme with the 150 and 200 period moving averages. I've shifted this around a little bit in that the Fed will likely leave rates unchanged as the decline of inflation has slowed recently. We've been seeing stronger than expected economic reports, and we've known that now for a while. Well, now the Fed is saying, okay, we're probably not going to raise rates, but we're not necessarily look at lowering rates either. The dollar was down and interest rates also dropped. We closed at 4.6% for the 10-year yield, where we had been at 4.69%. We're still inverted with the yield curves. Sentiment did tick down. We're still negative at 40, where we had been at 41. Our trend is still negative. The red line is on top. The ADX is still below its moving average, but we're still above 20. So we're in a trending environment, but it's a weakening negative trend. We're negative with the bias, and now with our momentum, I've switched it over from mixed to negative. The economic reports that came out, we had a pretty healthy dose here. We get the weekly MBA mortgage applications index. It was down 2.3%. Previously, it was down 2.7%. The ADP employment change came in stronger than expected at 192,000. They thought 175,000 would come out, and that's down from the 208,000 that we saw last time. The S&P Global Manufacturing PMI, it's right at 50. When we're at 50 or above, that shows expansion. When we're at 50 or below, that shows contraction. So we're right at 50. You could choose to look at that in either a positive or negative way, where last time it was at 51.9. This was the big one. The ISM manufacturing also dropped below 50 to 49.2. They expected it to come in right at 50, and last time it was at 50.3. The JOLTS job openings came in at 8.488 million. That's down from the 8.813 million that we saw last time. Construction spending declined 0.2%. They expected it to be up 0.4%. Last time it was unchanged. So here's some charts. Here's the weekly chart that we look at for mortgage applications, where it was down, but it was down a little bit less than what we saw last week. Here's the ADP employment change, also dropping down. it's still showing a healthy growth in jobs, but it is declining from the previous reading. Here's the ISM, where we look at the blue line. That's still going right up to 50. It's kind of hard to see that right here. And the orders are decreasing. As we look at this, the prices and deliveries, prices are going up. That's inflationary, and deliveries are going down. That means that companies aren't really getting things out there to be sold necessarily. And then we look at trade, where we saw a decline both with exports, that's the blue line, and with imports, that's the yellow line. And here we look at it month over month, where it did decrease, coming in just a little bit under 50 with the latest reading. And then the job openings, still positive, but really dropped off from the last reading that we saw. Construction spending is declining, but it's still positive, but we've been seeing this coming down lately. So when we look at residential construction spending year over year, it's declining, but it has been going up, where we're seeing a continuation of the decline with non-residential construction spending. And we did decline with the month over month reading. Some Isabel net charts. We are looking at copper here. Now, this is a day old, and I believe copper was up in Wednesday's session, but this going up, it tends to be a barometer for the economy. As a general rule, when copper is going up, the economy looks stronger going forward. When copper is going down, the economy looks weaker, and it is going up right now. And I do cover this in the intermarket analysis video that I do each weekend. And this was here just a few days ago, but they decided to bring this up again. It just talks about if a company beats on both with their earnings reports and their earnings per share, and then their sales are more positive, I'm not really seeing that big of a bounce up right now. I mean, they do have an up day typically, but it's still below this average, where if a stock misses on both, it's well below average. They're getting hit hard for the most part. Here's a technical analysis chart looking at the weekly moving average. I just like to show this when they make these available, just to give you a different look. This is how different in a different way than how I usually show these charts. And we're right back down to about where we're at the bottom end of this bar, but we have some pretty significant overhead resistance that we have yet to break through. And then looking at the smooth US recession probabilities, we're above the black line, but we're still below the red line. We get nervous if we go above the red line. Didn't find anything on Twitter, wondering kind of where we're at here in this whole cycles thing. We were kind of following it there in the month of April. Now it's kind of hard to figure out just where we're at, and this chart hasn't been updated lately. So looking at our intraday chart, we did have a lower open, and then we didn't get down to S1. We just kind of went above and below the 5,025 level, and then things started to really skyrocket up. We went positive. We went above the daily pivot. We actually got up above R1, and then we topped out at that point, and then spent the rest of the session coming down and pretty much ended about where things started before the announcement. Intraday, we are seeing a bit of a pickup. We were up about 0.5% or so right before I started recording. That's still many hours before the market opens, and that can change. And we'll have to see how things play in Europe. They were closed on the 1st in Wednesday's session. We'll see how they react to what the Fed had done and if they have a positive day or not. Intraday, we're seeing growth really dropping off right now. The blue line is now going back below the red line as growth is underperforming value. That's turning things a little bit more negative. We're also coming down with the S&P growth to value ratio where it closed negative. We were seeing some improvement, but now we're just chopping more or less sideways. End of day, growth was down more than value for the large caps. It was also down where it was up for the mid caps based on value. And they were about equal when we look at small cap growth versus small cap value. And just to point this out, this middle area, these are the corresponding ETFs. We did decline with the end of day chart with small cap growth versus small cap value. Also declined to slightly sideways with the mid caps. And we declined with S&P growth to value on the end of day chart. We're turning back down a little bit here with our other study between growth versus value, we're going to be watching this 250 period moving average. If we were able to bounce up off of that, if we start coming down and drop below it, that's going to turn things much more negative. We ticked up just a little bit with discretionary to staples. Looking at our ratio, we're still coming up off of this 200-day moving average, and we're right in between. We've got the 50 period moving average and the 100 period moving average with large cap growth. We cannot seem to get above that, and we're seeing that across a lot of charts right now. As long as this 100 period moving average holds, support is still there, but we also have overhead resistance. The Wilshire also having a hard time getting above its 50-day moving average and was down slightly in Wednesday's session. Here's our trend where we are negative. It's declining, and it's the moving average and the ADX are kind of on top of each other. But the red line's on top, so we still default to negative. Also, we're a little bit below the moving average here with the short-term ADX with the red line on top. So again, negative. We did pick up with volume to above average. A lot of folks got involved in Wednesday's session. We have a latest reading here. This is as of April 30th, where we're still more in neutral territory when we look at investors' intelligence. And we're coming down with the Ulcer Index after it had been giving us a pretty high reading, but we're still above the moving average. The VIX declined slightly with the line chart as well as the bar chart. And this is kind of crazy with the VIX of the VIX. I don't know if this is erroneous data or what happened here, but for a while there, volatility of the VIX really picked up, but then it ended up coming down. It did go up a little bit because of the down day, but we're still below the moving averages. The momentum for the VIX continues to be down. And then they asked, what do you expect the VIX to average over the rest of the second quarter? Most people think we're going to be right around 18. So if we go back here and look, we're at about that level right now. And it's kind of hard for me to see these numbers in here. And some folks think that it's going to go up. Most folks think it's actually going to drop. So that means there's a more of a positive slant as we go through these numbers. And then I'm not going to go through all this. This just looks at the bullish sentiment, retail, and institutional data that they have here against the S&P 500 and what sentiment was doing. And then we have the S&P on top of that. You might find it useful to pause and look at this chart. And the equity put call ratios were not updated by the time I started recording. We ticked back up a little bit with the volatility risk premium. Now, with the big down day that we saw on Tuesday, we didn't really see this going up. We actually saw it decline. And then we had a slight down day on Wednesday, and this is ticking up a bit, but we're still below this lower band, showing the volatility based on this chart has really been dropping. We did tick down just a little bit with this fear gauge, where we ticked up with the other fear gauge that we look at. And we're showing a little bit more weakness with the advanced decline line based on price and volume. We're still above the moving averages. We had been hanging on to this, hoping that this would go higher, but it's just not seeing any follow through to this point. This is looking positive still. Even though we're coming down a little bit with the new highs, we're not really seeing much of an expansion of the new lows. There were a few, but we're still going up with the 5 period and the 10 period. So this is still looking more positive internally for the S&P. We did drop below 0 with the advanced decline ratio. So that's turning more negative. We're also declining below the moving average again with accumulation distribution. So that is negative. The Chaikin money flow is now starting to go back down. It had been showing an improvement, but now it's reversing. So that's looking more negative. The Chaikin oscillator is below the midpoint and declining. That's negative. And didn't see much of a change here with the cumulative advanced decline line for the NYSE. And we're right about on the moving average with our regular NYSE advanced decline line, and also pretty much on the moving average with this other NYSE advanced decline line. And saw a little bit of a tick down based on common stock for the NYSE, also a bit of a drop based on volume. And we're still positive, though, with the new highs minus the new lows for the NYSE. So it's barely positive, but it's still positive. And when we look at the cumulative advanced decline line based on price for the S&P, we did come down, and we're declining with a little bit more momentum when we look at this based on volume. So that could be slightly negative. We're below the moving average with our advanced decline lines. When we look at the NYSE common stock, the S&P, the mid caps, the small caps were actually up, but they're still below their moving average. So here's our short-term chart. And now that we're shifting a little bit in this chart, it might be a little easier to see how we're just bumping into the 50-day moving average. We fell down through this pivot point. Will this other pivot level, which may line up about with the 100 period moving average if we continue to fall, but the market's just really going to have a hard time turning back to positive until it can get back above these moving averages. On the bottom, we are above average with volume. And here's the 20 period moving averages, which are providing overhead resistance. And we're kind of right in the middle here near the lower end a little bit with our double and triple exponential moving average based on 20 periods. We're still having a hard time getting through the mini rainbow as it is acting as resistance. We're coming down with our 20, 50, and 200 period moving averages, although we were pretty much flat with the 200. We're negative with the force index. We're below zero and below the midpoint. And we're declining in the short-term stochastic. We came right up to the midpoint and turned down with the intermediate short-term, and we're rolling over after we had been seeing some improvement with the long short-term stochastic. We're dropping down to the border between the -1 and -2 standard deviations channel. We were just a little bit above that yesterday. Well, we're a little bit further down right now. So we're not necessarily extreme negative with this chart. Intermediate term, the balance of power continues to be negative. The go, no-go system is now switched to the darker or deep purple. That's turning more negative. And we're below the midpoint with our highest high, lowest low value chart. We're still going up here with the TTM squeeze with the lighter shade of red. But if we see more follow-through weakness, this could turn down and turn to a darker shade of red, which would be more negative. And we're still bumping into the underside of our triple exponential moving average based on 50 periods. We're just not able to get above that. And we're also below both the simple and exponential moving averages when we look at regular, how they're calculated on a regular basis. We're watching the 100 period moving averages just in case we continue to go down, and we'll be seeing if this ends up providing support. We're negative with the ease of movement. We're below zero and declining. We're still flat with the Arun indicator. We're negative with the S&P McClellan oscillator. So that leading of volume for right now anyway didn't really follow through into anything, because now we're turning back down with the summation index looking at volume, where we're also now declining based on price. We did come up, but we're still negative with the NYSE McClellan oscillator. So we're going down based on price and now starting to roll over a little bit based on volume. This is more negative. When we were, it looked like showing some improvement and even still going down with the S&P, the Swenlin trading oscillator was starting to go up based on price and volume. Well, as we've been kind of going up, and you can see there's a series of higher highs here, and we still have higher lows. So this short-term chart pattern is looking okay, but we're going to need to break out to the upside for it to turn back more positive. But as we look at this, we're dropping below zero based on price and volume with the Swenlin trading oscillator. And momentum, which had been showing some improvement, we look at the PMO, it's now looking a little more negative. We're still slightly above the moving average based on price, and we're flat to a little bit above the moving average based on volume. And we're coming back down, not really showing anything decisive with the PMOs that are rising, starting to roll over with the buy signals, and now starting to decline with the PMOs above zero. We're negative with the Elder's Impulse system for the S&P, but we're still positive with the parabolic SAR. If we start to break below these previous lows, that could turn the dot back up on top, which would turn things in the intermediate term more negative. If we could see a nice upthrust, then we would maintain the positive stance for this indicator. And we're continuing to go up. We're above the moving average with the slope oscillator after giving an extreme negative reading. We're right on top of the moving average and starting to turn back down with the MACD. So the short term, the slope is still looking okay, but now we're seeing some weakness in the TSI. Intermediate term with the MACD, we're on top of the moving average. We're negative with the PMO and the PPO, where we continue to be negative with our longer term tricks and KST oscillators. And we're right in between this whole spaghetti mess. We're below the 20 and 50s, but we're still above the 100s. If we break below this, then we're going to be seeing, are we going to go all the way down to the 200-day moving averages? And we declined a little bit, but we're still above 50 with the bullish percent index. And we declined, but still above 50 with the NYSE bullish percent index. But we are now looking a little more negative with the NASDAQ 100 bullish percent index, as it did turn back down, and it's also below 50. The money flow is declining and below 50. That's negative. We're dropping below 50 with the ultimate oscillator. That's negative. The vortex is showing the red line going up and the green line going down. That's negative. And I tried to add some color here. We spent since November until the early part of April with all of our RSI readings pretty much being above 50. That just shows good, solid upward momentum. Now, since the beginning of April on a shorter term basis, and then a little further into the month, we're spending a lot of time below 50, and this is showing more negative momentum. We're still below the moving average and declining with on-balance volume. And with the stocks above their 20-period moving averages, we were showing an improvement, but now we're dropping back down, and we were not able to get back above 50. We did get back up to 50 with the 50-period moving average study, but this is now declining. We're also declining, but still above 50 with the 100 and declining with the 200 and still well above the 50 level. The copy curve is still looking more positive, but if this is going to turn more negative, it takes a little bit longer for this to happen. The Sean trend meter is declining, and we're still wondering if this Ichimoku cloud, we've been kind of tapping the underside of this cloud right here, and for right now, it's providing support. There's the Pring bottom fisher, which did generate a buy signal, but we're just not seeing any follow through with that based on price. Here's one that I haven't shown in quite a while, and I usually just breeze by this in the weekly videos because I say, oh, the mass index is not generating a signal. Well, it may be getting close to generating a signal now. It's triggered the first part of this indicator when it crosses above the red dashed line. If it gets up to the blue line, that would be part two. And then when it crosses down below the blue line and comes back down to the red dashed line again, that's an official signal. And this is signaling a change in trend. If we were going up, this indicator suggests that we would turn and go the other way. If we're going down, then we might reverse and go up. So we'll be keeping an eye on this to see if it tells us anything. Our different charts, we're looking more negative with the Heiken Ashi. We're still positive, but pointing down with the Kegi. We're negative with the Renko, and we're negative with the 3-line break. And we're still below this R1 level on the weekly chart of the S&P. We were able to get or tease that level just a little bit, but we need this to really go up and then close above it on a weekly basis for this to turn more positive. And we are coming down. If we see another down day, we're probably not going to be extreme with our 150 and 200 period moving averages. And we're negative in the short term, and we're negative in the intermediate term with the small caps and the NASDAQ 100. And we're negative across the board with bonds based on price. Commodities have also recently changed to negative in the short term. No change on the decision point scorecard. We're still negative in the short term, positive in the intermediate term, and mixed in the long term. And we saw some blue along the way here. The NASDAQ had a little bit of trouble, but it was bouncing up and down below these different values. The S&P did have a MACD crossover. So, but the chart that I looked at, we're right on top of the moving average. So it may have registered that, but it's not showing really any conviction right now. And we are declining with the S&P as well as the equal weight. They were pretty much unchanged with the ratio. The broad market and the mid cap or the mega caps did about the same in Wednesday's session. And we're dropping down to the lower end of this range now that we've established with the Dow. We're still below the 50-day moving average, but above the 200-day moving average. And we continue to be negative with the diamonds for the Elders Impulse system. We're also dropping down with the NASDAQ, and we're dropping down with the NASDAQ 100. We're negative with the Elders Impulse system for the QQQs. We were trying to show some improvement here with the momentum of the NASDAQ 100, but now it's rolling back down below its moving average. And we're below these moving averages here with the QQQs. Unless we can get above that, that's going to turn things more positive. But you see, as this moving average has been coming down the 20 period, This is setting in a recent series of lower highs right here, but we're also seeing a series of higher lows. Now, you might call this a triangle, and I don't do that kind of stuff. I'm just going to follow what's going on based on price and what's happening with the moving averages. The small caps ended up being up a little bit further into the sideways range they've been in, but they continue to be negative with the Elder's Impulse system for the small caps. We're just a little bit above this resistance slash support level now with the Russell 2000 small caps. We turned up, but we're below 50 with the RSI. We still have a longer term uptrend. Momentum, we're right on top of the moving average. The mid caps also having a hard time getting above the 50-day moving average, but still above the 200 as they close near the lower end of the range for Wednesday. They continue to be negative with the Elder's Impulse system. Apple ended up declining 0.5% and is in a downtrend. Tesla also declined after it had spiked up. It's pretty much been trailing off, trying to fill this gap. Where Nvidia, it's just a little bit below its 50-day moving average now. Microsoft has been declining below its 50-day moving average, even though it was up in Wednesday's session. Meta, which gap lower, has been chopping more or less sideways and below its 50-day moving average. Amazon, which reported earnings, they're just about at the 50-day moving average. We'll have to see if that can give the market some support on Thursday. And then Google, which spiked up after their earnings report, has pretty much been trailing back, even though they were up 0.2% on Wednesday. The FANG index was showing a little bit of hope here as it was giving more of a challenge to its 50-day moving average. Well, now we've dropped down below that. And the financial sector is probably, it's just a little bit below its 50-day moving average, even though it's still in a longer-term uptrend. And we're back to watching the staples and tech ratio, where we came right up, showing that staples were outperforming tech. Looked like we were starting to decline. Now we're starting to shoot back up. We'll see if this is going to continue to break above this moving average or if it's going to hit this and then drop back down. The dollar ended up being down. I know it shows it up here. That's because this is like a 24-hour chart here. But we fell below the 106 level, and that gave support to stocks, but they didn't really take advantage of it. When we look at the correlation between the S&P and the world index, we're showing a little bit stronger correlation with the 10 period, and we're still slightly declining with the 50 period correlation. And we're still battling below the 50-day moving average with the total US stock ETF. We were down with the 10-year yield, which didn't give support to stocks. We were up with the 10-year based on price. And then we're not really seeing much improvement here with our growth to value ratios. Turning back down after hitting the moving average when we look at the Qs to S&P, coming back down but above the moving average to discretionary to the S&P, and large cap growth is now declining under the, it's actually going hand in hand with the moving average when we compare it to large cap value. So we're seeing some weakness here with the large caps, mid caps, and small caps. We're still looking okay here with the 10-day average of the S&P 500 highs minus the lows. We're above 50 and we're continuing to go back up. But when we look at the 19-day exponential moving average of the advanced decline ratio, we're now dropping back below zero based on price and volume. Excuse me. And we're just a little bit negative here. We had been hanging in there with the 5-period moving average of the highs minus the lows across the broad market. Now we're starting to drop negative. And we want to keep an eye on this. The S&P to utilities ratio continues to go down. We want this to go up to be more positive for the S&P. And we're just kind of chopping around sideways with our staples to S&P. What bothers us here is this real spike up that we saw, meaning that staples were outperforming. We want to see this decline for that to give more support to the S&P 500. And we've got 2 days left. We have not triggered a ZWAG NYSE breadth thrust. We're going to have a really powerful update on either Thursday and or Friday to not have this window close for this signal. So what's our outlook for Thursday? We're still negative in the short and intermediate term, and we continue to fall from that overhead resistance. We're going to get the trade balance, the weekly jobless claims, as well as existing claims, productivity and unit labor costs, the preliminary reading. That could be rather influential. Factory orders will also be coming out. And then the oil has been dropping. It's under 80. I haven't been showing that chart lately as things, they're always unsettled in the Middle East, but they seem to be a little bit calmer for right now. And a lot of the news in the US is still about all the protests going on the university campuses. And then Friday, we're going to get the employment situation report as well as the ISM non-manufacturing. That's services right there, where we had the manufacturing. That's where things are built. That's what came out on Wednesday. And so the jobless claims are kind of the biggest thing on Thursday. Seasonality, we're positive with the Dow, where we're neutral to positive with the S&P and the NASDAQ. But May through October, according to what Carson found out, it tends to be the worst performing 6-month period that they measure. And then now we're in the second trading day of the month where we might see a little positive seasonality here. We were supposed to see it on the first day. Usually the first day of the month has some positive seasonality as we're seeing inflows into the market. We'll see if some of that can come through into Thursday's session. Thursday is one of the more positive days of the week, and we're wondering where we're at here. We're below the average, but we were trying to bounce back up, but now the last couple of days we've been coming back down with this seasonal weakness chart that we've been seeing pretty much that same thing as we now get into May, where we're trying to get back up to the green line, which is the top first quarter during an election year. And then this is where we look out longer term, where May tends to see more seasonal weakness before we get into June, July, and August, and even September, according to this chart, where the first half of May tends to be not really weak, but not strong by any means. But then according to Carson, they have May showing that we're up 77.8% of the time with a 2.3% return when they break it down by presidential cycle going back to 1950. Where May does have a solid track record, but not a real good return for the month. And then here's another new one. It says, maybe we should call it sell in June. Well, other charts that we look at say, no, that's when tech really starts to take off. So maybe we should buy in June. But what they're saying here is that the S&P 500 is up in May, 9 of the last 10 years. Well, we'll just have to see. See, we can take the same data, twist it around just a little bit, and get different results. That's why I like to look at a lot of different studies when it comes to seasonality, where this is as close to forecasting as I get, and that's just using it as a guideline. And then where we do see typically, then Carson also comes out with his chart saying that June, July, and August, oh, they look pretty good. Or if you go back to the other chart they released, it's like sell in June. Why would you do that? It tends to be a pretty good month. And then this is kind of a funky chart where they look at the conditional seasonality, where if we had an up year, that's a bull market, and that's how things tend to perform. And then if we had a bear market where we were going down, that's how things performed. And then you take all years together, which still has an upward slant. I'm not sure if this is really all that helpful or not. It's just kind of showing a real generalization. So the warning signs, both the S&P and NYSE McClellan oscillators are negative. The bullish percent index for the NASDAQ 100 is negative. It's not bouncing. I should have changed that. It's now falling again. The Swenlin trading oscillator is negative. We dropped below zero based on price and volume. The Chaikin money flow is negative. The money flow is negative. The ultimate oscillator, the Koppik curve, and the vortex are all negative. The oscillators are also negative. We're still below short, intermediate, and long-term support, or what we're also calling now resistance for the S&P. And the momentum is still negative for the NASDAQ 100. We have not decisively crossed above that moving average with the PPO. Positive. For right now, we're still positive with the parabolic SAR. We're above 50 with the bullish percent index for the S&P. The Chaikin oscillator is still positive. And is that right? I'm not sure. No, I think the Chaikin oscillators actually turned negative. We dropped below zero. I just failed to update this chart. But the long-term trend is still positive, and the equity put call ratio, not sure where we're at with that right now. The financial sector is still hanging around its 50-day moving average, but longer term, it's still positive. And we have 2 days left to see if we're going to get an NYSE breadth thrust, a ZWAG NYSE breadth thrust. So our conclusion, we're negative in the short and intermediate term, and we're still below overhead resistance. That's really where we're at in the short term. We're also dealing with that in the intermediate term, where we continue to be positive in the long term. Thank you. I hope you found this helpful, and I hope you have a very good day.